Welcome back to our show, your show, Let's Talk Stocks. And rejoining us for a very interesting conversation is Keenan Falconer, policy analyst at the Ministry of Finance. Of course, he's talking about the very topical issue, the government's missed revenue target. He believes the government has still been growing, still been driving revenue growth, and still making a surplus. Let's continue this conversation with Keenan. Where do we see this year, 24-25 coming out? Are we going to be exceeding that 3% surplus?
Oh, yeah.
Can we, given all things being equal, given where we're starting from now, can we realistically expect to?
Yeah, that's the normal expectation that we will meet the surplus because it has been happening year upon year upon year over the last couple of years. That it's now the norm to meet it than to not meet
Of course.
it. You know, because that's the change in the fiscal dynamics. We realize the attention is only when you miss it. We had been meeting it for so often that now,
or even exceeding it.
Or even exceeding it. So, you know, because that is the norm. But when you miss it, you know, we have set such high standards for ourselves that now, you know, it just makes the news all over.
As we look at, again, going back to the government's push, where you're looking to drive growth through increased commercial activity, increased commerce, increased business, are we likely to see that area return to overperform? And are we expecting, and you, as you had said, some of these taxes that were filed but not yet paid over, are we expecting those to come in early, let's say first quarter of this fiscal year, and therefore by Q2 we should be back on track and not necessarily be worried about this?
Well, the earlier the better. I mean, I don't think it's a case where you have to worry even if it doesn't come in the first quarter, because there are many different categories of revenue, and corporate income tax is just one out of income and profits. Production and consumption is still performing well. Taxes on international trade should rebound because that was the other area that went down a little bit. So those areas more than enough compensate for any declines in other areas.
Taxes on international trade.
Yeah, those things are SCT on imports, GCT on imports, customs duty, and all of those things.
And what would have caused that one? Because we certainly haven't imported less, have we?
I mean, you know, there might have been declines in personal shipments and trade and things like that over the period just gone.
Well, no, your new adjustment would have been in this fiscal year on the small shipments.
Yeah, and you mean
that would have affected.
No.
Where is the big growth area in 24-25?
You mean sectorally? Or, I mean, there's still, real estate is still performing steadily. You know, you look at everything else, agriculture, manufacturing, mining, and so on. Services, tourism, obviously, as well. There are traditional sectors you're looking at. That's where we are relying on the growth, even if it's not excessively robust. It's steady. As long as it's positive, that's all that matters.
Here's one concern. It's for me the big elephant in the room. We're going into an election year.
Yeah.
Can government, if the revenues are not at that robust growth level, can they manage to pull back on expenses?
I don't expect that they're going to, pull back on expenses, and I don't think there's going to be any additional source of revenue. You know what I'm referring to, whether through additional taxation or borrowing. Regardless of an election year, the policy direction has been to maintain fiscal stability, and I don't think it's going to be thrown out, even given the short time horizon. That would be a massive effort that I think is not likely to happen.
Are we seeing any international reactions, any fallout internationally based on this? IMF, for example, would be concerned. They would want to have a look in and say, well,
no, I can definitively say that this will not affect the current arrangements that we have, because they assess an entire program's performance. One quarter alone is not enough to derail an entire thing, given our past track record in the last decade of meeting our targets. So that's not a concern, absolutely not.
And Jamaicans should be comfortable, because as you speak to that past decade, it has been a massive shift from prior. And businesses and business confidence have really come up. The capital markets have really been happy with the new direction. Should they continue to be bullish on Jamaica, given?
I think so, because if we have weathered so much, right, in the last 4 years after COVID, people really underestimate that persons have not recovered yet. And yet we are just about past where we were before. It's almost as if it never happened, right? And so if we can get through that, and so we consolidate a little bit right now, the growth period is going to come in the next couple of years, as long as we maintain this effort by consolidating.
Am I hearing you saying, so basically we came out of COVID, the actual rebound, the restart of the economy would have given you that.
Yeah.
And so that having plateaued and reached where it is, we are now at a stage where we need to reassess and begin to really look at how we drive things going forward. Is that where we are?
Yeah, I mean, it's all about management of expectations. If you think that, we are good, and we are good, but we can't overestimate how good we are. So we are at a particular level, no less, no more. And if we want to get to the next level, we just have to ride it out. There are some places, who get worried when they go into a recession, for example.
Here's a challenge, Keenan. Interest rates are still high.
Yeah.
And the businesses will tell you they would have been impacted by this high interest rate. Some new expansion, some new growth initiatives, business expansion, new initiatives would have been put on hold.
Yeah.
You spoke about real estate. Some of that would have slowed.
Yeah.
Are we not concerned that inflation has remained a little sticky, if you may? We need it to come down. Are we not concerned about where inflation is? Should we be concerned?
Well, based on the bank's projections, and I don't want to speak for the governor, but he himself said it, that he signaled already that, we will have to decrease rates eventually. I mean, everybody kind of is on that same consensus. It's almost been 3 years now. November makes 3 years of these entire rates. And the business community will agree. Everybody, I think, agrees. And I think once that signal is given, you can start to look positively in that direction.
But as you talk about the bank and what they've been projecting, certainly we'll look over our neighbors in the US. And they will say the Fed, many projecting that the Fed would have cut maybe in the first quarter. That projection has shifted to maybe third quarter. People are looking at September and so on. However, the labor market has remained tight, quite robust. And that, given that and therefore consumption, may have kept things, the inflationary pressures, a little higher than the bank would have expected.
Mm-hmm.
Is Jamaica significantly different from that? Is the government a victim of its own success in the labor market?
Well, I mean, they always, I just want to use an analogy. They say there's never any perfect indicator, but there are good indicators. Mm-hmm. And when you have all of them trending in the same direction, it means at least one of them is out. Because if your unemployment is low, and then, there's always an inflationary pressure. But what can you do? I mean, you find particular level of unemployment is around 6 to 7%, below which you start to worry about inflation in the Jamaican context. So yes, of course, in the tight labor market and of course wages increasing in the public sector, that's always a concern. But that's why we said it has to be matched by productivity, and if it's not, then you're in trouble. But every economic decision must have a trade-off.
How do we get that productivity up? Jamaicans, when they go overseas, they're known to be very productive.
Yeah.
But the labor productivity locally, it's not at the same level.
I mean, it's a
How do we fix that?
culture of productivity that you have to fix the environment in which you productivity. It's not down to individual workers just merely being lazy. That might be true for a few people, but on the whole, if we have been speaking about productivity for 40 years, it's clearly a structural issue. That means the environment, specific workplaces, specific policies, specific procedures and administrative processes must be conducive to productivity in order to increase it at the level of the worker.
Is that something that can be incentivized? And who would provide that incentive?
I mean, government can do it, the private sector can do it as well, but it really comes down to the level of the individual firms. You know, there are different people with different best practices that can be shared so that productivity can increase across different industries. And I think that we just don't have that culture of how we are goal setting and meeting our targets. That's why the public sector itself is coming with that performance management system to fix that precise problem.
Would exports help? Increasing exports rapidly?
I don't see how it would hurt. I mean, you know, I want to know more about the link between exports and productivity. But on a national scale, yes, it's probably an index of production. But, you know, there are so many different dimensions to productivity beyond that.
Here's the other elephant in the room. So we seem to be on the same paths, same activities to drive growth. And yes, it's very important that we get the commercial side up, that we get the corporate profits up and so on. But what about the orange economy? It's $1 trillion
the creative
US
sector
industry.
Yeah.
That's what we're really known for as a country.
Of course.
Why aren't we earning more from that? Why isn't there a direct focus on driving revenue growth?
I think we think we're not earning from it. I mean, the orange economy, creative sector, cultural industries are known for having a lot of unrecorded activity. And I think it really pushes most of the informal economy. You know, informal economy doesn't mean necessarily all low value added and, you know, you're just on the street kind of thing. But because it's hard to really track the velocity of money that exchanges hands between people, because, you know, it's not like taxes, for example, is only a small part of the equation. And I think, yeah, it's largely a problem of recording this activity. But I think it's something that should be sustained, supported, encouraged to develop.
And can we drive more tax revenues from that side? Or would it have to be indirect, and how do we do it?
I think, you know, when you're taxing consumption on that side, it should show up, right? Increasing it, I don't think directly, you know, how do you start to charge taxes on some of those things directly? The nature of the industry just doesn't really make for it, just like so many other informal economy activities. So it's necessarily always going to be indirect.
As we look to wrap, Keenan, you seem still bullish. Should we not worry about you're saying we shouldn't be worried about the missed revenue targets?
No, I mean,
those revenues will flow in the new fiscal year?
Yeah, I don't think there's an excessive worry. Like I said, once we have made a surplus despite all of that, it's like you get 99, 99, 99, and then one time you get maybe 98 or 95. You know, does the world, some very strict parents might just say, oh, you know, you never get 100 or something. And that's really the situation. We can't, yes, one situation, 1 month is always important, but don't let that negate what has happened. The pattern is what's important.
And we're likely to return to.
Yes, we're very likely to return to the fact that it has come in 1 month. It's not like a trend where it consistently happened month after month, or you had 8 out of the 12 months or 10 out of the 12 months and only 1 or 2 overperforming. That's not the trend. It's just 1 month out of the entire 12.
Thank you very much, Keenan Falconer talking to us about the government's missed revenue targets. He says not to worry. The revenues are still growing. The government still made a surplus and will continue to do so even in the new fiscal year. But that's why we do this show. That's why we say it. We give you information to make better financial decisions. Come back with us tomorrow morning at 9. Another wonderful program lined up for you.